Now, what can we do with NOI? NOI is the foundation of every investment. The more accurate the net operating income, the better the analysis will perform. If NOI is suspect, lenders, brokers, and clients will not have faith in your calculations, and you probably won't get a deal together. Now, from part 1 video on measuring the investment, we used the annual property operating data form. Now, part of the APOD looks like this. Effective gross income must be true, and you get that from the owner's tax records. Expenses must be accurate, and NOI must be true, or the whole analysis will be off and unreliable. Now, net income is all you have left after expenses. There's nothing else left. And out of net income comes your profit, your debt, your unforeseen expenses, and any cash flow that you might be fortunate enough to get. So here are 3 formulas that simplify a quick analysis. Cash on cash. Simply divide the amount of the NOI by the amount of the cash that you put in, say your down payment and expenses. Now, here's an example. I put in $375,000 and get $15,000 back. What is my rate? Another good formula is the IRV formula, the income, the rate, and the value. You can just change the rate and value, and you can see different outcomes from the NOI, because NOI is all you got, and NOI is the constant. The last formula is the debt service coverage ratio. From this, you can determine just about how much a lender will loan. Again, the NOI is the constant, and NOI must be true. Now, we all know that lenders are very risk conscious, and safety of their funds are paramount. Lenders usually want from 1.15 to as high as 1.35% for a project. I usually use about 1.15 to 1.25 and find that's a good mid-road calculation for the debt coverage ratio. Now, 1 is break even, and if you're at 1 or below, you're not going to get a loan. Now, if you're at 1 or above, depending on how far above, you'll get a loan or a revised loan. Remember, the lender is your partner, and they can have a substantial amount in the investment. Lenders can have anywhere from 40 to 95% depending on the borrower. Then also depending on the property and the bank guidelines. Now, all this sounds pretty good, but the key is if you measured correctly, because NOI has to be true. Now, if you would like to invest in property, if you would like to sell your property or lease your property, or just talk about the value of your property and do an analysis on the property that you own, then send me an email at info@montrosecommercial.com. This is Chuck Trice, and this is Investment Tuesday.